In today's episode, we are joined by John Barnett, a legend with over 60 years in the auction game. So stay tuned for some unbelievable stories that you will not hear from any other auctioneer because no one's been doing it for as long as John. But first, a quick announcement. This October, we are hosting an exclusive property trading mastermind retreat in sunny Portugal. It is the perfect opportunity to level up your property game, surrounded by top experts like Safe Dersey, like Oliver Adams, and several others. You can expect hands-on workshops with personal mentoring and amazing networking opportunities. If you are ready to take your investing at auction and by trading to the next level, click on the link in the description to have a call with myself to find out more. Do not miss out. But now, back to the show. So welcome back to Property Auction Hunters, and today we are joined by a very special guest. This is John Barnett from Barnett Ross Auctions.
60 years of experience.
60 years of experience.
Yeah. Lots of stories, and today's episode is all about those stories and all about the auction world like no one has seen it.
So a little bit of background for us is I've been working for an auction company. Piot's been buying and selling properties at auction. And quite recently, we sold a property at auction through Barnett Ross Auctions, and it was a fantastic result. And people have asked us, why would you pick Barnett Ross Auctions for this specific asset? And we've always said, for certain properties, in our minds, we go to certain places to get certain results. And this was a very nice converted property into flats. It had a value point that we thought, you always see Barnett Ross do really, really well with that £2 million plus, really well positioned, really well managed asset. They always sell really very well. When myself and Piotr first started working together and we were looking to do deals, we were always going through the Barnett Ross catalogue, and we saw a couple of properties in the Kent kind of area, and we thought we could pick that up for this price. It would be an amazing deal. And the amount of disappointment we faced.
Those properties always sold for like 2-3 times the guide.
Selling more than what we were thinking, it would be an amazing price. So 60 years worth of experience, some excellent results from Barnett Ross.
Well, it's good to think that you go to the auctioneer that you couldn't buy stuff off because he got such a good price.
The common sense is irrefutable, John.
Correct, yes.
So tell us a bit more about yourself. We just kind of brushed over 60 years, but where did that start? How did that begin?
Oh, my auction world started because when I first started working for surveyors and estate agents in Holborn, which was Harman Healy, we're a very small setup, and if we ever dealt with an investment property, it was natural to put it into someone else's auction. Although all chartered auctioneers, as we were called at the time, were members of the London Auction Mart. So you could always rent a room for an afternoon, a 6-seater room, not much bigger than this. Maybe there'd be half a dozen people turn up and people would jump from room to room because there might have been half a dozen auctions going on at the same time. And we used to put properties in other people's auction. Then one particular client, he said, I'm having to pay you a fee and I'm having to pay the other auctioneer a fee. Why don't you do it? So I took the plunge, and the first property I remember selling was just in Offord Road, Islington, just off Caledonian Road. And I think that was 1972. And then it built up, and over the years, people, would trust you and say, would you put this up for auction? And suddenly the catalogues grew and grew, and sometimes I did over 100 lots.
So how long were you at Harman Healy? Was it like a long time?
I was at Harman Healy until, Harman Healy, I then sold out in about 1988. I sold my shares in the business because I was by then senior partner, and I was wooed by a few firms, larger firms, who wanted to take me over, but I didn't want to lose my sort of independence. And a firm came along called Barrington Lawrence, who no longer exist, and they'd been bought out by a company in Australia called Salmons, Sallmann, and they agreed to pay cash for the shares because I didn't want shares, because who knows, I wasn't a person who relies on that. And I did the deal. But I remember my solicitor and accountant said they'll go bust. And I said, why? He said, because their assets were as a result of valuations for goodwill.
Right. Okay.
And goodwill, you can't really sell, unless someone really wants to buy it, and it's a bit of a false. And they were right. Within 2 years, they went bust. And I remember I had a bank guarantee on some shares they'd given me. I had to take some shares, and I said, I want a bank guarantee that I can be taken out. And then when they went belly up, they asked me, would I give up my bank guarantee because it triggered other assets in Australia? And I said, no. Why should I? And, I had to take counsel's opinion. It was legal time, but whatever it was, I got what I wanted. And then the business went in the hands of a receiver. And they said, did I want to buy it back? And I thought, not particularly, because I'd have had to be with sort of a particular setup with partnership. And I let another company buy it, and I took on a salary role. And then after 2 or 3 years, I wasn't happy with the setup. And I started Barnett Ross with Jonathan Ross, who was like my junior that I took on, and he became managing director of this other company. And I said, let's go on our own. And we went on our own and took local offices in Whetstone, near where we both lived. And it's all goes along very, very, very nicely.
Amazing. And did you always focus on like commercial property or
mainly
investment
commercial
property?
Because I used to manage a lot of commercial properties, and therefore I'm very familiar on the Landlord and Tenant Act. Didn't like residential that much because of the onerous liabilities. Once I had a particular client, and I happened to mention him yesterday, and I'll mention him now because he's no longer with us, but he was the chairman of the GLC. His name was Horace Cutler, OBE. And if you go through Blackwall Tunnel, there's his plaque on there because he opened the tunnel.
Oh, wow.
So he was real way up. And I used to manage property for him, and he wouldn't carry out repairs when I told him to. And eventually it got to the stage where I felt I was at risk because the councils could take action against the managing agent like they can do today.
Yeah.
And I said, no, I can't do your management any longer. And that was it. And we parted ways.
We also like commercial property for that same reason. With a commercial property, you never get a call from a tenant saying the boiler is not working.
No.
Or I've lost my keys on a Sunday night, Saturday night. Yeah.
Well, you're probably aware of the recent acts, not only the cladding, but the acts, anything over 4 stories where you've got to now fireproof the common parts and the service areas. It's an enormous liability. And, there are charges. You can end up with a criminal charge if you don't comply, or someone has an accident and you didn't repair the step and someone had told you that there was the carpet had a hole in it.
Yeah.
So residential, is quite onerous. And that's why you've got a lot of people trying to get out of residential. You have to pay a licence fee in certain boroughs to be a landlord. Did you know that?
Well, in the whole of Wales, you have to do that.
Whole of Wales?
Absolutely, but in certain boroughs, they have compulsory and selective licensing.
Yes.
Depending on what asset class that you have. So, yeah.
Yeah, and people who deal with HMOs, I think you've got to have a 24-hour method of people having someone to contact in case something happens in the middle of the night. So, yes, it's very onerous. But then again, look at the commercial. You could look at the way that the rental values on commercial, in some areas, they probably dropped to a fifth.
That's right.
To a fifth.
Yeah. Commercial property is much more volatile. We see properties where someone bought a building in a prime city center for 6.5 million. And then 20 years later, they might be selling it for 1.5 million.
Oh, yeah.
Because of the rental values. And it's a massive volatility, but I also think there's lots of opportunities of adding value in ways that you can't with residential property.
Yeah,
with
if you're purely commercially minded, there is a lot of value adds that you can miss because you're not aware of particular PDs or prior approvals.
Yes, you've got to be aware of
You
the
need-
benefit of the switch to resi.
Yes, and even if it's partial switch to resi, you keep a commercial on the ground floor, you put some residential above. There's a couple of people we know that are doing conversions for commercial property, keeping the ground floor commercial. Then the uppers they're turning into HMOs. So now they're getting the benefit of both qualities of income, which is quite impressive.
So in your years of experience, who are the clients that you remember the most for doing like the most amazing deals?
Oh, well, I can't obviously.
You don't
whilst
have to name them.
whilst
You
I
just say-
named Sir Horace Cutler, I mean, one client of mine, he once bought 106 houses.
Oh.
And he asked me to manage them. And I'm talking about in the 1970s. He was a chartered accountant in property who realised that all his clients were making money, and he went into property. And I managed 106 houses, and suddenly there was little houses that were coming empty that were going in the auction. So he made big money on it. And there's been quite a few of the very successful people who bought portfolios, because if you could buy properties from, say, public companies who didn't want the small parades of shops, or didn't want the terrace of regulated tenancies in certain areas, for them it was a liability. They weren't aware of the breakup potential.
Yes, yeah.
So in effect, you could buy wholesale. And then people were fortunate when, I think it was in the late 80s, when there was a change of use from offices to resi. And for example, there was one property that I bought personally, and I paid £30,000 for it. And what it was, and the family still own it, it was a building in John Street in Holborn, and it was let when I bought it on a 99-year lease from 1900.
Okay.
Oh, wow.
At a nominal ground rent. And when I bought it, I think there was about 25 years to go on the ground lease. Okay. Now, one thing always bugged me on it: the original lease was lost in the First World War in a fire, in a bombing attack. So there was only a certified copy of the lease that was held by the tenant, which I never saw. Because you only hold the lease that the tenant signs.
Yeah.
And it always nagged me and thought, hope that he hasn't got one that says it's 999-year lease. But fortunately, it wasn't. And with 20 years to go on the ground rent, there was then this change of use that you could automatically go to residential. And I was able to buy in the remains of the lease from the lessee, because he moved out of the offices and people didn't want offices at the time. And yes, then we converted it into like 4 houses and 8 flats, and it is worth many millions of pounds today. But generally, property companies, the big companies, didn't have the appetite to want to break up the things themselves.
Yeah. Because they were used to just buying big blocks.
Chunks.
And they only really saw the value of the income coming from those big chunks, and didn't realise that the individual parts are probably worth more than the whole.
Were worth many, many times.
Yeah.
And probably by the time it got to the management of the people who did know, it wasn't really going up the chain. And then all, the successful big property owners today, the ones who are probably the billionaires, a lot of them had property companies over the years, and they maximised. And then there was the boom in office rents, the city, where I just drove just before, EC2. There were times when, these old buildings that would make lovely flats were commercial, and you couldn't find a tenant for them because they were old-fashioned.
Yeah.
But then so there were times when the planning changed that people reaped the benefit.
And now those old-fashioned buildings are so popular.
Oh,
and
now they're so popular.
Fashionable.
The wharves, the wharves in Bermondsey, that overlook the River Thames. They were from no value to fortunes people made.
So we've been walking around here a little while. We had another recording session, so we went for a walk. And you look at these like New York style loft apartments,
yes. Yeah.
But these old warehouse buildings, the red brick, built really very well. They are millions and millions.
Well, they got more character.
More character, and they're in really very accessible areas in really trendy what are now really trendy parts of London. So you have to buy at the right time.
Yes.
So like over the years, like what kind of changes did you see where people were like, oh, this is the end of commercial property, this is the end of retail, this is the end of residential buy-to-let? Like you probably have seen many phases where people are saying things or media are saying things, but things come back. What kind of things did you see that turned
don't
around?
forget, I experienced the 1973 crash. Now, and I had an auction, I think it was December, and I don't want to say my memory's going, it was either December 72 or December 73. It was the crash about that period. And there was one particular instance where there was a big bank and someone had completed on a Friday, and in those days you used to get a bank draft.
Okay, as part of the completion.
The completion was a bank draft. You didn't have transfers like you have today.
Yeah.
So you would get a bank draft, and your bank draft, it would be like a letter from the, not a letter, like a signed check called a bank draft from the bank. So if you got it from Barclays Bank on the Friday, you knew that Barclays Bank would be there on the Monday.
Yeah.
Okay. There was one with a company, so I won't say the company in case they're still around, but they completed on the Friday, and their bank was one of the secondary banks, who, when they gave you a bank draft, you had to then get the Barclays, say, bank draft on the Monday to convert it. The people completed the sale of the properties on the Friday. And on the Monday, or over the weekend, the secondary bank went under. And then, everything hit the fan because the people had completed. And so that was like that was one of the big sort of collapses in the 70s. And then you had straight away interest rates went to
18,
sort of up to 14, 15%.
Yeah.
And then you had the peak in 1988. There were rents from 1988 achieved that couldn't be achieved, say, because obviously we've had a dip these last 3-4 years, even a bit before COVID.
Yeah.
But those 1988 rents, if they were like 20-year leases from 1988, when it came to 2008, which was the next sort of big financial plunge, some of those properties, you couldn't get a quarter of what the original rent was.
Wow.
And you had people holding those leases, and if they guaranteed it, or if they were stores that couldn't trade at them, they would just close them down and pay the rent.
We've seen that as well recently.
They got to pay the rent, pay the rates, rather than trade, because they would lose more by trading, because then they got all the staff and the stock.
Yeah.
So
and the utilities, it's just easier to, wow.
So there's always bad stories. I mean, you had this recent collapse, but it wasn't to do with the market. Isn't it this REIT?
Home REIT.
The home REIT.
That's right.
Where they'd, palmed off lots of properties with these lease backs to, if I say Mickey Mouse charities, would that be a fair description?
Yeah.
Or maybe the people.
Some of them were Mickey Mouse.
Or maybe some of them were genuine charities who thought, let's start a charity because someone wants to let me take a house and convert it and get grants and everything. and they were selling them off.
We did a few videos about Hammered, and also there's one where we talked to a person who bought a lot of stock from Hammered through auctions, and he did really well from it. But yeah, this is a big thing, kind of big scale.
It puts a lot of questions on a part of the market where this is supposed to be housing for some of the most at risk or vulnerable people in society, whether it's refugees, women's services, if they've been abusive relationships, disabled children, all of that kind of stuff. And then you just had a massive group of people, and Hammered are not the only ones. There are other dodgy providers out there, of course, that have went into it purely for the sake that they could uplift the value with this enhanced income
of the building.
That's
all they were thinking of.
And then they were basically buying it for this, uplifting it without putting the tenants in or doing the conversions, balance sheeting it here at the higher price, and it was a house made out of matchsticks. It was always going to fall down. But it's interesting. You find when you're dealing with corporate sellers, asset managers, banks, people like that, when they decide on a route to market, what they normally do is they tender for the services, or they will be selling with this agent, or this auctioneer, to not put all of their eggs in one basket. But miraculously, all of that stock is being sold directly into Allsop residential auction from the asset manager. Yeah. So it's there's one anomaly and one dodgy practice after another that seems to be following this bad smell around.
Yeah. I don't know who was the vendor of those 501 lots in the 3-day Allsop auction. I didn't know who it was.
There was a lot of Hammered stock. Probably half of the catalogue was
100 to 150 since November.
And there's
last
still
year.
about 1,000 properties of Hammered to sell by the end of the year. So there will be plenty of that.
And you wonder if was there a bank involved as well who had the...
Yeah, there's a bank and a pension provider that put a lot of money into this. So they're trying to get the money back. And I guess now, like, a lot of people are going through like a tough times with the mortgage interest rates being high and like difficulties refinancing things. And like, what kind of advice would you give to those people who have trouble refinancing? There are all kind of things going on with property now.
There's an old phrase, your first loss is your best loss. At least you know what your first loss is. You can quantify it. So there are times when you decide to borrow money, and I've personally been involved either as surveyor for a lender, or sometimes I put in some family money into some loans. And lately we've been getting between 9 and 12% for 1 year money.
Yeah.
And it is always on a property. Number one, I only want freeholds. I only want a first mortgage, because if any of these companies contact me and say, do you want this? It's a second mortgage. I remind them, I said, I've told you before, the only seconds I like is apple pie and custard. And that is my normal reply to them. But if we're getting, let's imagine you get an average of 10 or so %. It's 1 year money. You're only lending on hopefully 70% maximum of the value. You will know the track record of the borrower. You will also have the personal guarantees of the borrower. Now, you might say, what's the good of a personal guarantee if he can't pay you back? Go down that route. You're not going to push someone out of their home for the sake of 50 grand, and they're not going to let it get to that stage for 50 grand. But generally, I think I must have been involved, whether for clients or for family, hundreds probably. You didn't ask me to prepare in advance, but my memory is telling me maybe on 2 occasions there might have been a small loss. That, when the freehold was sold, it didn't recoup
the
70%, because also maybe for a period the borrower hadn't been paying the interest. So it wasn't all because of the capital figure.
It was the rolled interest.
And, some of these loans, there's many providers or lenders of these bridging loans.
Hi, I'm Michael Alison. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the Flow Bridging range, which is specifically designed for those fast completions, which will come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.
So where you asked me, I think, what about people who might be short of money? Yes, they could borrow on that sort of market. Bearing in mind they've got to pay out at least 10% plus a brokerage fee plus a legal costs. But if it helps them over a wobbly period for a year, then it's paid for it, because they might say, I'd rather pay out a bit more to borrow rather than be forced to sell at the figure I would like to get, but I can't. But generally, the market tells you what it will pay. The auctioneer or the vendor, you can only say, that's the lowest I will accept for my property, but you can't make the person pay more.
That's right.
Yeah.
And too many people, just don't let it find its level.
Yeah. And how do you convince your sellers to enter the properties with those like low reserve prices? What kind of conversations do you have when you'd like telling them, I think your property may sell for X, but this is where you need to be.
I would tell them that, first of all, traditionally, an auctioneer would always like a reserve at least 10% below what he thinks it will make. But we don't know what a property will make. Now, I had one 2 years ago for executors, house in Henley's Corner, Finchley, Golders Green, by the Naked Lady, and been empty for years. There were rats on the floor when I went in.
Just for the viewers, the Naked Lady is a statue. It's not actually just some
not
naked lady on the grass somewhere.
No, she's not there. So don't all rush there today. And the actual statue is called La Deliverance. I think it was put up by the French after the war.
Yes,
it's a famous statue there. We always called it the Naked Lady. Now there was a house. I went over it, and I'm no expert in houses round Finchley. We check up, and I said, but the looks of it might make between 700,000 and 800,000, because you've got to spend at least 500,000. Needed everything doing to it. They said, you decide on the reserves. We're the executors. We just want it sold, because the beneficiaries were charities. And when you do have beneficiaries of charities, you do sometimes get the charities sometimes sensibly get together to say, look, so-and-so's it's been left to us, 5 charities. We ought to keep an eye just to make sure that someone's not selling it wrongly, cheaply, or that they are going to auction and that they're not selling it the first day prior and said that was a wonderful bid. So the charities you do speak to, a few times I've done that, and they'll appoint a lead charity who will be the one person who reports back to the other charities.
I see.
So I was in touch with one of the charities, and they said, look, whatever you decide, if it goes to auction. So I said, I thought it's worth about 700 to 800 grand. So I said, we'll put a reserve of 500,000 on it. Reserve was 500,000. And in a way, fortunately, I didn't get any offers pre-auction. I just said, we're going to auction, because they had 5 lots in the auction. Because if I'd have been offered 800 grand, I wondered what I'd have done. I don't know to this day. Or if I'd been offered 900. We had 47 registered bidders. Now that means 47 people paid us a deposit to shadow a deposit for the right to bid.
Yeah.
It went for just over, I think, 1.1 million.
Oh, wow.
And we then obviously unscanned the 46 deposits. But you say, what do I say to people? And that story I probably tell to people at least every auction in advance, to some client who will say, what reserve should I have?
I think that's the Naked Lady effect.
Well, it's the Naked Lady effect, because also some clients, and I've got clients from many years ago, they've either, the properties cost them next to nothing, let's say, if they've had properties 40 years, 50 years. And I say, well, look, it doesn't owe you anything. They say, whatever it is, we take. It's like, if the share is a certain price today, 46p, some share of some public, that's the price today. You can't say, I want the price that it was 6 months ago, or I want a higher price than today's price. So,
have you ever had a situations where people put a reserve on a property and this property sold for the reserve and they were so unhappy about it? If
it sells for the reserve, well, I tell them in advance, if it only makes the reserve, it shows you there's only one person out of the many thousands who see the auction addresses and lots who wants it in Great Britain or the world. So what does it say for your lot? Yes, you could buy something in one auction, you could sell it in another auction, but then that is 2 weeks later, possibly to a different audience, possibly to someone who didn't see that it got sold less price a few weeks later.
It's a fool's errand trying to time the market, right?
You can't.
So it's impossible. So you just have to say the auctions are great because that's the value of the property on the day. It's an unfettered, open environment where people can bid and they'll pay what they think it's worth. Some people will get carried away, other people won't. But you can't sit there and think John Smith from Huddersfield is going to be looking at this type of property on the 3rd of December 2024 and then put it right in front of him. That's not possible.
No.
So there has to be an element of realism. And I always think with auctions, it's brilliant because if you take away the motivations from the buyers and the sellers, you're dealing with people that have made a decision to do something. And when you're dealing with the open market through a estate agency, some people are just listing their property because they just want to see what the interest level is. They have no intention of selling.
Oh, do they? I'm glad I'm not in that market.
So same here. But at least with auctions, this person here has made the decision to sell. This property is going to sell.
Yes, that's an encouragement for. I use that. Funny, I was talking today with someone on a property that I've got in the next auction, and I said by going to auction, anyone looking at it say this vendor wants to sell.
Yeah.
Oh, I used that this morning.
But it's true, and it's the same thing with the buyers. The buyers have the seller has the comfort of multiple buyers in a competitive environment.
That's the thing.
So they take the risk on the reserve, however uncomfortable it may feel to begin with, but it will find its true value on the day.
Hopefully, because that lower figure is the thing that's attracted them. If there was if I go back to the property opposite the Naked Lady, if I'd have put a reserve on it of £1 million or 900, no one would have ever looked at it.
Yeah.
They'd have said, "Don't be silly. This is only worth 600-700 grand. I've got to spend £500,000." And just to tell you, it took nearly 2 years for someone to ever do anything on that property because I pass it regularly.
Wow.
So that means someone probably got caught, got carried away on the day.
And you
overpaid.
can't control that.
That's called auction fever.
Yeah.
You have auction fever and you also get what's called vendor's remorse. You get some vendors, they can't accept that they will sell something, particularly if it's at a loss.
Yeah.
It's as though you're asking them to chop their arm off.
But you have the same thing with bidders' remorse. If they've,
You mean if I don't bid, I'll lose it?
Yeah. Or I bought it and, I haven't got my finance ready. I haven't viewed it. I
didn't realise there was a 15 grand expenses that that the auctioneer has tried to conceal, which a number of them do.
I think there's a lot of we've termed bidders' blindness, where they're blinded by just the price. And that they're blinded and they'll just keep bidding and bidding and bidding because they don't take their normal practical steps to make sure that they're
also you it's like you see someone in a fashionable pair of shoes or outfit, trousers, you say, "Oh, I like that, I'll buy that." You see someone bidding for the property, you say, "Well, he's bidding for it and he's a regular, well, he might be the seller." And you bid because you see other people bidding in the room.
Yeah.
It's like if there was a shop and, they were selling cakes and there wasn't any customers, you say, "I don't think anyone likes those cakes." But if it was, very busy and crowded, everyone's buying, they must be wonderful cakes.
It's always
similar with property. It's human nature.
And it's one of the reasons why an auctioneer leading up to a reserve price starts the bidding off, because it makes other people comfortable. Well, if someone else is bidding, I can bid, and all of a sudden it gets the ball moving.
It's funny, I was telling you, we've got one lot, I think in the next auction is going to be without reserve. And when you have something without reserve, which is quite rare, the auctioneer can't open the bid. Oh. You realise that?
Yeah.
Because there's no reserve.
Yeah.
So what I said to this client a few days ago, I said, "Look, let's just say the reserve is £500.
Yeah.
Because if no one will bid, you still haven't, even if it's no reserve and no one bids, you've got it. But at least I can start off at £100.
Yes.
Right.
Yeah.
And especially now in those times where you guys have the digital bidding, right? So you cannot even talk to people to say, just give me a pound, give me anything, and
No.
then
Oh, no,
probably
no.
with someone will. But if you have digital bidding, you can't speak to
Yes.
people, so it's difficult.
And when you talk about, what something's worth, it's only worth that if
In
we are
that
now
second.
249 or 253 in the afternoon on that day, because I can remember once where we had the auctions in the back of the Queen Victoria Street. You couldn't find them. And someone came in, he said, I'm the tenant. I said, well, we came up to the rostrum. I said, I'm sorry. I said, we sold it. He said, but I've got to buy it. I'm the tenant. So I said, well, look, the man who bought it is over there. He went over there and he gave the man a profit and took his contract. Now, that shows you, if you were saying market value, you'd have to say, hang on, what was the market value at 2:45 as opposed to
Quarter to three,
whatever.
Yeah. But we had that quite a lot at the contracts desk when I was at Auction House London. You'd have people either coming in late, or what would normally happen is someone would come to the back of the room, they'd sit down, they'd start the paperwork, and then someone who was in the room watching them bid, maybe still was sitting on their hands, came up to them and said, I really wanted to buy that. I'll give you 10 grand now to walk away from the contract.
Yeah.
And the amount of times you'd have one person on the phone to their solicitor, the other person, it'd be agreed between the solicitors, the monies would be transferred, and there was a deal just done like that.
I had situations where that was so early on in my career. Like it was 2011, and my boss was on holidays. He sent me out to an auction to buy 3 lots for clients, and I ended up buying all 3. I didn't know what I was doing. He just told me everything is sorted. You just need to bid up to those amounts. If you win it, it's sorted. Well, okay. And I won 3 lots. One of them was the biggest lot in the auction, like a block of flats in Maida Vale. And literally everyone was looking at me like, who's this guy? Just bought 3 lots. And as I was coming out of the auction room, like one guy followed me, he was an agent, and he's saying, my client couldn't make it to the auction. He wants that lot in Maida Vale.
Would you take a profit?
Would you take 6, 7, 5 for it? It was different times then, and we bought it for like 625, and it was like 50k immediately after the auction. I'm like, I need to call my boss, and call my boss. My boss saying, no, this is a hold for the client. They want it. It stays. But it just shows how quickly someone can act, and especially with auction contracts, this is a very committed environment where people are ready to make decisions.
Yeah, they're ready to make decisions, and they make them sometimes very hurriedly.
Yes.
And sometimes without advice.
Yeah.
Actually, that kind of backs onto a conversation. We had another recording session this morning with solicitors, and some of their major advice was, if you're going to be bidding, you need to have the right advice to do so. And we had an interview recently with David Sandman from EIG, and he said, unofficial figures on the back of a fag packet, less than 40% of people who bid and win a property auction have actually read the legal pack. Correct. Not even sent it on to their solicitors, 40%. Yeah. And that's wild to us because we put ourselves through the ringers. The due diligence that we do is absolute insanity. Yes. And then you just hear some people just rocking up to an auction, paying that money for it, and not even once looking at the legal pack. And it stuns us every single time.
Yes. But number one, you don't know how many lots don't get completed.
Yes. Yeah.
And people lose the deposits, which happens particularly with residential. Yeah. Particularly where there's all these hidden
clauses,
conceals. I mean, you get many solicitors, and I'm disappointed that some auctioneers go along with, for example, when they say there is an extra 2%, they don't use the 2 as a number.
They don't use numericals.
They'll say TWO. And I remember a few years ago when we were in the rostrum, when I was in the rostrum, and I highlighted this, and I said, we clearly say it in our catalogue, and we say it on our addendum on the yellow page, if there's an extra amount. I said, but the way these solicitors try to, and vendors, solicitors cooperate with them, try to conceal it. I said, we'll get to the stage, they'll be doing it in Bulgarian or something,
Well, we were talking to the solicitor this morning. He said, well, one of the auctioneers, the client gave the instructions. We have to follow the client's instructions on this, that they want to do it this way. We sent the special conditions off to the auctioneer, which I think was Allsop, Resi or Commercial, one of the two. And they batted it back, saying we don't allow that in our
Well, some of us have got principles, and some of us, if I could say, some of us are honest and some of them are actually dishonest.
Yeah, I mean, and it's obviously we sell through for clients and ourselves, and we pick auctioneers, and we're very careful as to how we structure our special conditions, because we're quite vocal on this point. We don't like that activity, that behaviour, and there are some auctioneers that we just personally wouldn't sell our own stock through, because if they're willing to do that, what else are they willing to do well?
Well, I got clients or many people, they say, we know with your catalogues, John, and your conditions, I read them all, every special condition. Yes, I suppose I could miss something, but generally I'm looking out for these non-numerical things.
Yeah.
Because I know that with particular vendors and with particular solicitors. It's like you get some vendors, they'll use a solicitor in the middle of nowhere. Why? Besides probably being cheaper, it's to make it look like it's not a normal
it's a big player
dealer selling it.
Yeah.
So you'll sometimes see solicitors in Wales or in the middle of, I don't know, Ross on Wye.
It's like you're psychic, John. We had a very similar conversation this morning.
Did you?
Where a solicitor said, "Oh, it's like this solicitor, blah blah blah." I said, "Oh," I mentioned the name. He went, "How do you know the name?" I said, "Because I know the 3 large traders that put pretty much 80% of their stock, which could be on a monthly basis, 300 or 400 lots a month, goes through a single practitioner's office somewhere in the south of Wales."
Yeah, that's the one. Yeah, I mentioned the one in Wales.
There you go.
And they generally, they won't reveal all the facts. They won't reveal the sort of
So I was interested in
notices.
This. So I was interested in this. So I said to the solicitor, I said, is there nothing in the SRA or the Law Society, like the moral practices? You've got codes of practice now for solicitors, which 20 years ago you didn't really have. You used to consider estate agents, second-hand car salesmen, and solicitors with the same disdain as you would anyone, in society. But solicitors have obviously come on quite a distance. Estate agents and auctioneers are being more and more regulated over the years, so there's a lot more confidence in those practices now. But I said, there's an element of complicity here. And he said, well, we refuse to act in circumstances like that. And if we're pushed, and it's a long-standing client, and we do it begrudgingly, fortunately, it tends to be with auctioneers that also push back on it. So we're finding less and less that we're being involved in this practice that they don't support. So it's for them, it's a very much a grey area. For the auctioneers, I think it's less of a grey area, because for the auctioneers, this is the route to market that this type of seller takes. If the auctioneer said, no, we're going to do it this way.
But have you come across, though, where they serve a ridiculous Section 42 notice for a lease extension?
Again, mind reading, John, this is getting crazy. This very morning, we were talking about this. Right. We had a leasehold, freehold specialist solicitor come and have a chat with us. And we expect to see these things. We like short lease flats and houses. It's some of the stuff that we like to trade ethically, I hasten to add. And he was talking about this one property. He said the Section 42 notice, the premium listed on the Section 42 notice was £35,000. Now, when we expect to see these things, sometimes someone knows the actual lease extension is going to be 70 or 50 or 70 or something like that. And they go in low to induce people to pay a little bit more, or to just get lucky. Maybe the freeholder doesn't respond in time and they get away with the cheap lease extension. It can happen. But in this instance, after speaking with a surveyor that specialises in short leases, the actual premium, reasonable premium, should have been 300,000
instead of 30.
Instead of 35, which is just demonstrable.
Right. Yeah. But the freeholder can say that is a sham notice.
Yeah, if it's
and invalidate the notice.
Yes,
but you'll find the special conditions will say you have taken your own advice as to
the validity,
our figure
and
validity, and that is another area where unfortunately deception is going on today, and it's not being done by one person, and you've got auctioneers colluding with them for that to happen. And the other thing I noticed some while ago was that one of the vendors, They gave this. Now, normally you're familiar then with Section 42s, because that's another area I specialise in, right? Normally, the notice period is giving 2 months for the freeholder to reply, isn't it?
Yeah, statutory notice.
days.
Yeah, 60 days, yeah.
Right. Now, there's one case, which I'll send you, went to tribunal. The people who served the notice gave 4 months for the Section 45 to be replied to. Why?
Because they were going to flip it into auction and they didn't want to get a response back in time.
They were flipping it in auction, and I think they obviously wanted to avoid, like you say, the Section 45 coming back before the auction.
Yeah.
And you hit it nail on the head.
Yeah.
And it came back then after the auction, after the man had completed.
Oh, wow.
So where you've got the notice being served, I think I can send you the tribunal case.
Yes, please do. Yeah.
And then you'll see the name of the auctioneer as well, right? I won't mention it on this speaker. I think the notice was served at 59,995, because often you'll see the particular habit
They
of
won't
these
put
people.
whole numbers
they
in.
Don't put they do it usually £5 less. So what, it doesn't matter. But the notice came back, I think, at 180 or something, and it went to the tribunal and it went to appeal, and I think the fella had to pay about 180, 190. But the 4 months, I believe they did it for that particular reason.
Yeah.
And maybe they've done it with that particular landlord in previous cases where they say, we're going to give you 4 months. Because also what it raises, and I read a lot of detective stories and thrillers and things, the freeholder could respond a week later. He could respond 2 weeks later.
Yes, yeah, he didn't have to wait the full 4 months.
Which normally, if I had something and I was advising the landlord, and you got a notice and it says you can wait 4 months to serve it back, you say, what's the point? I'll deal with it this week.
Yeah.
So I think it was something that maybe with that other vendor, they've done it previously, and they particularly might have said, got to be careful what I say, they might have said to the freeholder, please don't reply for at least 3 months, because by then we've sold it.
Yeah.
So that's opened your eyes to another little ruse that unfortunately is tarring the
I think
cleanliness of the auction market.
And here's the thing: there are a lot of good operators. You know, people that hit with a straight bat in auctions. And this isn't by any means. I mean, auctions is what we do. We're passionate about it, as are you. You know, 60 years and still going, and no signs of stopping yet, John, by the looks of things.
No.
But it's important to bring these things out, because it means that when people do approach auctions, they're doing it with an eyes wide open. They're looking out for these things. And even if you can't
It's good if you do highlight it to people.
Even if you can't change this activity that we don't like, at least bidders can approach the lots and say, if there is 2% or 2.75 written in words on an extra special condition on the very last page in you know, where it's faded text or whatever they're doing these days, at least they can say, well, I'm going to pay 2.5% less than what I was going to pay.
Yeah, but people don't. Because they get carried away.
Yeah.
But the other thing you've got to realise, that 2.5% plus VAT, if you go to borrow money on the property, that won't come into the loan assessment by the lender.
But it is included in the stamp duty calculation.
Yes.
So you don't get the lending to cover the cost, but it does come as part of the stamp. So, yeah.
Amazing.
You made me just sort of flashed across my mind. I don't know who is going to read this, watch it, so I won't say the name of the person, but years ago, my sort of family, we sold a property to a very quite famous person. You would know, even my granddaughter sitting here would know this particular person. Very honourable person, and bought a property from us. I won't even say where it is, but London area, for X pounds, whatever. and it was let to a Barclays bank. And in the particulars, even though I was a part vendor with a partner, in the particulars we said, let on so-and-so, rent review after 4 years, whatever. When the rent review came up, he said, would I deal with the rent review for him? I said, of course. When I read the lease, because at the time I obviously had not absorbed it in the lease, and maybe it was a clause later on in the lease, said the rent review is only to 90% of rental value. Okay. So instead of the property being then reviewed to say by another £15,000, it was only reviewed to 90% of the 15. So in effect, it lost
value,
so much money over that next 5-year period until the lease would end, when the 90% review thing would fall away. So I told the client, he didn't know. He said, thanks very much. I said, I've worked out what your loss is. He said, what do you mean my loss? I said, because you're only now going to get, we're 4 years later, you're only getting 90% of your rent review uplift as opposed to 100%.
Yeah.
And I said, I've worked out what the 100% should be.
I bet he asked for you, don't tell me, John.
No, well, I told him. No, and I gave him back the money.
Wow. Oh, wow. Okay.
Well, of course. Why do you think I'm telling the story?
Yes.
Because I told him something.
Yeah. So did the client did he have to exercise that rent review? Or was it the Barclays that came and say, we want to pay now 90%?
No, the lease said the increase would be only 90% of the excess.
Okay.
So in effect, he was only getting 90% of the excess rent, as opposed to...
Oh, so there was still an uplift in the rent, but there was only an uplift by 90%.
Yes, he was getting his basic rent, so in effect, it would only be to 90% of the rental value. So if the rental value was, say, 60 grand, then he would only be getting 54. So he would have lost 6 grand per annum for 5 years, and I calculated the figure and gave him the money.
Yeah.
Wow.
And that was that. And I did that not because I was the auctioneer who sold it to him, but because I was the vendor or part vendor.
Yeah.
And I told my client, well, you've got to, put in with me. We, got to do the honourable thing, and that's what you got to do.
Yeah. Okay. So just to wrap up this chat, what's the like funniest moment in auctions you've ever had on your days on the rostrum?
Funniest? Well, funny. I could have looked up all my old notes and found it. I can remember once though, wearing a particular suit for an auction, and I went to go to the loo, and the zip wouldn't work. And it was quite embarrassing to have to sort of take off your jacket, your braces, your jumper and something to get the pants down. So that was one thing. But I happened to, being late today for you, it reminded me, I was once at the old London auction mart, Queen Victoria Street. And I remember I was selling for a big firm of solicitors a property. And it was the auction hadn't yet started. So I went to the loo, and suddenly someone rushed in. They rushed in, stand. So I says, you don't have to, don't worry, you don't have to rush. He said, well, it's already 3 minutes after 2. So I said, well, you don't have to rush. He says, why not? Because I said, I'm the auctioneer. I said, and I'll wait until you finish. I remember once on, was it April the 1st, we had an auction, and I had a...
Don't tell me you fooled someone, they bought a property.
I put in a make-believe lot of the White House in America.
Yeah.
Had a beautiful cake made, and I auctioned that, for charity, and we delivered the cake to Great Ormond Street afterwards with the cheque, because the person who bought it said, give it to the charity, give it to the hospital. Instances we had once at where would that be? The Marriott Hotel near Piccadilly. We once had someone run out of the auction room. And, I saw him, I knocked the property down, and I saw him doing a runner. And I told my assistant, quickly, he's on the move, and run out, got the bloke. But if you can't get the, deposit, he then came straight back, and I made sure people still were there. I said, look, I don't know if this is going to go through or not. We get the deposit. I waited, and then I re-offered it. At least I had all the bidders in the room.
Yeah.
Because I think I did tell you, and I'm sure I said when I once knocked down the property at Sittingbourne,
Yeah.
and the man in the front row, I was already on the next lot. And my assistant, it was Jonathan at the time, he went up to the man and he said, "You've just bought this at, whatever it is, 163 or something." And he wouldn't give him the deposit. He said, no, he said it wasn't 163, it was 63 or something. Some enormous gap. And, I then quickly stopped the next lot I was auctioning. I said, sorry, I've got to now go back, because I realised I didn't want the bidders to possibly go out of the room.
Yeah.
And I knew I had 5 bidders over the reserve. So obviously if he was the only bidder at the reserve, I wouldn't have re-offered it. And I re-offered it. And second time round, with less bidders, it made about £2,000 more. And why? Because the underbidder, who didn't get it the previous time and lost it, then realised he might as well pay more. And the man who was another underbidder also bid more second time round.
Yeah.
So again, it proves that point. There's no such thing as value. And in fact, years ago, I did... when there was a discussion with the RICS about values and how it should compare to sales and prices, I said, because the RICS, I believe, say you should give a precise value. And I said, for me, everyone wants to have a range of values.
Yeah.
What's the point of telling you a property is worth 500,000 and you can't sell it for 500?
Yeah.
Whereas if you were told the range is 450 to 500 to allow that spread, it's much more, to me, informative than giving someone a figure that they'll say so-and-so said it was worth that, and that can stick in their head for years.
Yeah.
Yeah.
Amazing. Well, I think the current era equivalent of those stories would be, oh, my cat hit the keyboard and I didn't mean to bid
you
half a
mean
million.
the modern stories? Oh, you're right.
Yeah.
But what you do, I don't know if you've noticed it, there's rarely a case where it's to do with what the auctioneer did in the rostrum.
Yeah.
Yes, it might be on misdescription, but it's not going to be on what the auctioneer did.
Yeah.
Interesting. Well, fascinating stories, John.
Okay.
Thank you for joining us today and sharing all those stories from
Pleasure.
the rostrum. And we'll put the details to contact you, Barnett Ross, about
Lovely.
anything in the description of this video. And thanks again.
Okay. Well, thank you very much, both of you.
Cheers, John.